The stock market is still in a bear market. Colin Rush, an analyst at Oppenheimer with a hold rating on Tesla, is joining us right now. Let's talk about yesterday's move first. Was it only technical? Did it have a fundamental basis? Or was it just an oversold stock that was given a little boost by positive news? I believe the latter is more true. A few of the price reduction rumors were overdone, and the company is now going through a minor product refresh. People were, I believe, processing some of that. When a stock rises 20% like this one, individuals may conclude it's time to cover or make a short-term trade, since the company is one that will be developing cutting-edge technologies in the ensuing decades. Future growth for Tesla is predicted to be stratospheric, providing investors with seemingly endless options. Tesla's energy business, Cybertruck sales, potential $25,000 automobile, and vehicle sales will all have an impact on the company's stock price by 2030. The stock price will also be greatly impacted by Tesla's SSD and robots. We're going to reveal the possible blueprint for Tesla's stock valuation by 2030 in this video. We'll also provide the strategic riddle that, in a matter of years, might propel Tesla's stock price to unprecedented heights, bolster the company's revenue, and establish Tesla as the industry leader. In your most recent report, you mentioned that Tesla is making significant investments to grow and derives IRA benefits. How long do you anticipate these measures to increase capacity to take to complete? Those IRA provisions are paying them immediate benefits, which are taking place at the moment. The competitive dynamic is the true central dynamic in this discussion of margins. Asia is becoming a very competitive market in terms of pricing. For a while, the sector will face challenges to its profit margins as it attempts to reduce costs in order to break through and enter the mass market, especially with regard to the cars. This is a multi-year effort rather than a short-term one. We believe the company has a considerable cost advantage over many of its competitors, especially Western OEMs, and that it has overcome many of the ramp issues that Western OEMs continue to face. It will take several years for this to be completed, and in order to raise prices or margins, we need stable rates, steady sales, and a recovery in consumer demand. We anticipate that this will occur over the course of the next 12 to 24 months, not the next 3 or 6 months. Tesla is currently leading by a sizable margin after managing to maintain an advantage over its rivals. Companies such as Rivian, Lucid, and NIO will need years of continuously high sales to attain the advantages that the automobile has. Apart from having the largest supercharging network in the world, which puts it ahead of many other electric car businesses, Tesla also possesses the infrastructure required to compete in the EV sector. Welcome back to Tesla Hype, everyone. The amount of cars that Tesla can produce by 2030 will have a significant impact on its sales. This is encouraging as Tesla intends to shortly begin operations in Mexico and already has production facilities in 3 important markets: Germany, China, and the US. Tesla is now able to create and sell cars more quickly than most manufacturers in these areas thanks to this expansion. Tesla's stock has performed well over the long run, but the road hasn't been easy. When Elon Musk revealed he had the money to take the company private in 2019, Tesla's shares fell by 56% after falling 38% in a matter of months in 2015. These kinds of swings are typical of growth stocks. By 2025 and 2030, analysts forecast that Tesla's share price will have increased dramatically. Please click the like button, subscribe, and enable post notifications if you like this kind of information so you can be informed about all things Tesla. In the upcoming years, Tesla's key advantages will be in innovation and infrastructure. For example, Tesla wants to produce an affordable electric vehicle at a considerably lower cost than the majority of EVs on the market today. Elon Musk, the CEO of Tesla, previously tweeted about a new electric vehicle that would cost $25,000. We think this could be the Tesla Model 2. Musk unveiled an enticing $25,000 fully autonomous electric car during Tesla's Battery Day in 2020. This inexpensive electric car has the potential to turn Tesla around, becoming its best-selling model and pressuring other manufacturers to produce sedans that are more affordable and appealing to a wider market. Tesla is also moving more and more in the direction of artificial intelligence, virtually earning the title of chip stock due to its achievements in battery and electric car technology. Tesla, which is currently viewed as an industrial stock or electric vehicle, may move towards artificial intelligence as its own chip technology matures. Currently, Autopilot, which helps with lane changes and parking, and fully autonomous capabilities, which manage tasks like approaching stop signs and parallel parking, are supported by Tesla's chips in its automotive business. The final objective is to create a robotaxi platform that runs flawlessly on Dojo and FSD chips. Elon Musk has said that Tesla might integrate its self-driving software to make its cars into robotaxis, giving it an advantage over businesses that don't make cars. Tesla's Dojo system, a supercomputer that handles computer vision and video processing and uses machine learning to support autopilot, is powered by the Dojo processor. Additionally, Tesla has created an FSD, full self-driving, chip that aims to optimize silicon performance, thoroughly test functionality, and interact with drivers to assist in chip programming. Tesla anticipates that this chip will enable autonomous driving by optimizing performance and redundancy. According to expert analysis, Tesla's robotaxi technology is expected to significantly boost profitability. Some estimates place margins as high as 80%. If this is correct, the robotaxi platform will be where Tesla makes the majority of its earnings. Selling regulatory credits to other automakers is one of Tesla's main sources of income. In 2022, this revenue will reach $1.8 billion. Under rules pertaining to fuel economy, carbon gas emissions, zero-emission cars, and clean fuel, Tesla is credited with tradable points. With direct operating lease agreements in the US, Canada, and Europe, the company's car leasing revenues reached $2.5 billion in 2022, up 51% from 2021. Tesla's revenue is also largely derived from its energy sector. If these conditions are met, faster profit growth might push Tesla's stock price up to $5,000 to $4,500 per share by 2030. If FSD is granted a license, it might go even higher. As a result, Tesla's market capitalization would reach about $6 trillion, which would be significantly more than its present $720 billion. According to Cathie Wood, CEO of ARK Invest, Tesla is the company that stands to gain the most from recent advances in artificial intelligence. The company expects to reach a revenue target of $8 to $10 trillion by 2030 through autonomous mobility, which is 6 times higher than its current revenue. Immediately after, Nvidia's stock rose sharply, positioning the company as the most valuable chipmaker globally and putting it on track to reach a $1 trillion valuation. How do you feel? Please share your thoughts with us below, and don't forget to assign a value to Tesla. To gain additional insight into Tesla's activities, select the subsequent video that appears on your screen. I'll see you over there.